Hi, everyone, and welcome to the chart review. I'm Xenia Taubina, and in this weekly review, we'll look at the 6 markets and their daily charts for the markets that I follow most closely, which are the S&P 500, Russell, NASDAQ, GLD, GDX, and TLT. I'm still a bit under the weather, so please excuse the rusty voice. Okay, let's begin with the S&P 500. So this is the daily chart of the S&P 500, and in the prior review that we did 2 weeks ago, we watched this level over here, 57.86, as a key resistance at the time. We were still under this line. And instead of turning down below this line, what we saw this week is a strong gap up that cleared the 200-day moving average. That's the dark blue line over here, and cleared this resistance line, pulled back to test it from above, and extended higher into the end of the week. As those of you that are subscribed to the daily service know, and in the weekly service as well, this was viewed as a bullish signal. So the question preference now is for the S&P to remain over 5481. That's the red line with the first red triangle, so above this level, and ideally hold vicinity of the broken resistance, so that's 5786, and proceed higher. Depending on how much of a pullback we may see this week, it will determine where in this red sell zone or target zone the rally is likely targeting. So if it's holding 5786 vicinity, then it will have a path to the upper portion of this box. So that's as high as 6804. And if it stages a bigger pullback and closes the gap that we saw last week, then more modest targets will be watched. So probably the lower portion of this area. All of this we chart on the hourly chart of the S&P 500, but that's not within the scope of this video. That we cover in the daily service. So viewed as bullish for as long as above 5481, and ideally holding vicinity with or without the gap close, but really the 5700 area would be ideal. If it manages to undo this week's progress, upside progress, and close the gap and proceed below 5481, it will reopen the potential for the rally to have been corrective and to then proceed below the April low. To make such potential likely, it will need to break below 5101. So that's the second red line here with the red triangle. So that's the S&P 500. Now let's move on to Russell. Russell is in a more bearish stance, as we've been discussing, and that perspective remains for as long as 2158, which is the red line here with the first green triangle, is not broken. So yes, it also gapped up. Yes, that somewhat opens up potential for new highs, but so far it's a long way from making that potential likely. So to me, the earliest indication would be a strong continuation above 2158. And until such time, I'm viewing it as having potential to turn down in this red zone. And earliest indication of the turndown will now require a break of 1930. So that's the first red line over here with the red triangle. And the confirmation of a completed corrective bounce will require a break of 1788. So that's over here. If that is seen, then the first potential target zone will be the 2023 low of 1633. And depending on how it arrives there, would have to see whether much lower targets are also how likely those are. So that's Russell. Now let's look at NASDAQ. Let's hope I can find it. NASDAQ here. Okay. So NASDAQ looks similar to the S&P 500, a little bit stronger. It also saw a meaningful gap up on Monday's open, not only clearing the 200-day moving average, but gapping well above the prior resistance. So while the S&P 500 pulled back to retest the resistance, which in Russell is the equivalent of 20,292, NASDAQ did not do such a pullback. So this basically the pullback bottomed above prior resistance. Similar to the S&P 500, I'm favoring it to hold in Russell, it's 19,234. So that's this red line over here was the red triangle. And to proceed to a new high. And similar to the S&P, depending on how this rally is subdividing, would have to see where in this target zone it's aiming. So potential for as high as 24,876. And if it maintains this gap as unclosed, so the Monday's low is not breached, then it will have a good shot at the upper portion of this target zone. If it closes the gap, then the lower portion of the target zone will be favored. On the downside, earliest indication of bearish action will require closing of or really breaking back below resistance, so below 20,292, and a sustained break below, basically, for lack of better term, the 200-day moving average will undo the upside tilt here, and will open up potential for the April low to be broken. So that's the absolute minimum, a sustained break below this 20,292. And a stronger indication will require a break below 19,234. So that's the red line here was the red triangle. And a confirmation of bearish action below 17,592. So if that is seen, April low will be favored to be broken. And then depending on how it's proceeding, we'll have to see where it's aiming. But with last week's action, that scenario became has lower odds, let's put it that way, than the higher high scenario. So that's the three equity indices. Now let's move on to TLT. In the TLT, we have basically what I view as a bearish stance, and it remains bearish. The resistance level with the action that we saw over the last few days has been lowered to 88.21. So for as long as it's below this first red line with the green triangle, it's viewed bearishly, and potential for substantial acceleration down here. For such potential to become likely, it still needs to not only break the 2025 low, which is 84.89, so that's basically been massaging this low over here, but it needs to continue down below 78.58. So if it can not only break the low of this calendar year, but break the second support was the red triangle, it will open up a target of 65 to 70. So that's this target over here. And if instead it rallies over 88.21, then the near-term bearish stance will be neutralized. And then it will have to be seen what exactly is happening here, because it would put TLT in a rather ambiguous stance. So to begin to look bullish, it needs to proceed over 94.09. And if it can do so, it will be favored to proceed over the 2024 high, which is in the above 101.64. That's TLT. Now, next we have GLD. Okay, here we are. In GLD, I continue to monitor potential for a top, but while the near-term top has been confirmed, we have gotten a retrace to below prior high, which was kind of the some further downside was favored as of last week for those of you who follow my work closely. And we got that downside follow through. But so far, between this retest of the high that we got and what by the standards of the rally is a rather modest proportion of the downside follow through. So far, it's not convincing that this is a lasting top. So my perspective here is that, yes, we got a minimum expected downside follow through. Yes, there is potential for more. And that potential for more remains for as long as 318 and 318 spot 32 is not exceeded. So that's this first red line with the green triangle. So for as long as it's below it, it may yet show acceleration down. But so far, I can't really view it as a strong proof of concept here. So far, we have a modestly proportioned pullback. And on smaller time frames, that those that follow my daily work know that I was noting a bullish potential there on smaller time frames at the end of the week. So not quite convincing. To begin to look more convincing, it needs a sustained break below 272.58. So that's this red line over here with the red triangle. And to confirm a lasting top, it needs to break this line over here, which is 234.24. So that's a long way down. And so far, it's proportions of the decline are not really, we don't have a clear path there. If instead it rallies over 318.32, it will favor new all-time highs. And then depending on how that rally proceeds, I will have to ascertain how likely this upper target over here is, which is 385 to 461. So it could potentially be just a minor extension higher and then down, or it could aim as high as here. If it gets here, then there would be a good chance of a meaningful decline from here. But it breaking 318.32 does not automatically trigger a move all the way to this target zone. And in the daily service, we closely monitor how the rally is proceeding. So once above this level, we should have a better idea as to where it's aiming. Now, GDX. Okay, so GDX is in a similar stance to gold, but not nearly as extended, not nearly as bullish. In fact, it's still below its all-time highs from, I guess, close to about a decade ago at this point, more than a decade ago. So, but from the 2024 low, it's a similar stance. So it is possible to view GDX as having staged a larger degree top. To begin to confirm that top, it needs to break 40.26. And a stronger indication would be below 33.42. So far, all we have is a confirmation that the rally off of the April low completed. And we did get the minimum favor downside follow through. And similar to GLD, it's not very convincing so far. So yes, there's potential that it may accelerate lower, but so far it's not the kind of decline reversal down that would say, yes, we already have a strong indication that we have a larger degree top. So for as long as it is below, where is it? 50.83. So that's this red line over here with the green triangle. For as long as it's below this, it may yet accelerate down and may yet start breaking supports. If instead it rallies above this red line, then it will favor a new or the April high to be exceeded and will open up potential for as high as 59.71 to 72.88. So this red zone above here. Similar to GLD, it is not an automatic trigger. So exceeding 50.83 does not automatically trigger a move to here. It merely opens up this potential. And depending on how the rally is proceeding in the daily service, will track where the structure of the rally is aiming. So this is really more, I would say, the most bullish of the potentials that I see. So still lots to prove as far as a larger degree top, and so far unconvincing in terms of the top being in, even though the potential for such top remains. So that is it for today, folks. Thank you for joining, for listening in, and I will see you hopefully next week.